Test. Okay. All right. All right, my apologies, everybody. I got caught in traffic, and then when I got home, I had the dreaded Windows update working. So I'm here, but late. Thank you for waiting, and thank you for joining me on this Friday. We got a lot of stuff to talk about. A lot of interesting stuff happened this week and leading up into this week. The thing I'm, of course, going to talk about first, because that's what the people want, is, of course, a little bit of Bitcoin analysis, because I've made a very keen observation, at least I think it's keen, this week upon the CPI numbers that came out. And I think we definitely need to talk about that. But we also need to talk about something that I neglected to make a video about, much to my much to the consternation of my manager, Jen, was really go to me to make a video about municipal bonds. And I kind of missed that opportunity to share with you guys because with the CPI coming out, with the uh, presumed lowering of interest rates coming up, that opportunity may have reached its top. I mean, calling the top on something that can make 5% in a year is not nearly as exciting as calling the top or the bottom on Bitcoin. But I think it's kind of cool and important, but we'll talk about that here in a second. Let me make sure that we've got everything working. Looks like Discord is working. Looks like TradingView is working, and YouTube. I stream every Friday on those platforms. Links are, of course, below wherever you're looking. I want to make sure that you join, especially on the Discord. I don't charge for it. I went out this week looking for some Bitcoin analysis to challenge my own from other people that do YouTube and Twitter. And man, I swear, some of the people out there, they really focus on trying to get people these 10x gains. And I think I watched one that said, we predict that Bitcoin's going to 3x or 4x this year. But if that's not interesting to you because you need 10x, join our premium Discord. We'll tell you how to do that. I'm just like taken aback by something like that. See, boomer me, when I got into it, you had to give a disclaimer. Like you couldn't go in public and speak about promising gains to people. I mean, that's technically, I'm not sure if it's illegal, but you can get sued for that kind of stuff. But I think because everyone does it on YouTube, I think there's just so many people doing it that the regulatory authorities can't go after all of them. So people just assume that you can do that now, but you actually can't. And so what I try to do with my Discord is have discussions, and I do these weekly live streams, and I also talk about things like I did Bitcoin this week, sharing my analysis of price action, the potential Bitcoin short that's set up on the 30-minute on Tuesday of this. We actually set up on Monday before the CPI. And so there's a lot more in-depth discussion that goes on the Discord. Just because I can. I'd rather sit there and talk about what's going on in my head and what I'm seeing in the market in real time there than sit down and make a video or something like that. So really encourage people to. And as always, I do my spike indicator. It is free. I don't charge for it. Don't let any scammer contact you. And there are scammers every week that try to impersonate me on Discord. I have the only real NOROK on Discord because I got in Discord pretty early on that. So if you see a 3 or you see a 0 where an O should be, those people are not me, and do not pay them for any service because I don't charge people for anything. All right. As always, thanks for joining. If you have questions, if you have symbols to look at, put it in the chat. What I do in the first part is I talk about what's on my mind, and then we do a market analysis in the latter part of the Discord. And because I'm a little bit late, we'll definitely go long. We'll definitely go more than an hour today. But you guys, if you post in the chat symbols to look at, I'll go as long as you guys want to talk about stuff because I'm here for you. I'm here to share, get ideas from other people, and then share my own. So as promised, let's talk about Bitcoin. And let me get my chart set up here. This is a potential short that I was talking about on the Discord a little bit earlier this week, which I didn't take because the risk reward back down to the 50% retracement was not good. But interestingly enough, if one had put their stop right above the high that set up on Thursday of last week when I did enter my MicroStrategy puts, I'm not short Bitcoin, by the way. It's too dangerous right now to short Bitcoin because of the ETF news. I mean, it's just, you're going to see stuff like that. No, but I am short MicroStrategy, and I really like that position because I put it on at about 512 when MicroStrategy, this is what I talked about last week, by the way. They are at a 50% retracement from the November 21 high, so basically the all-time high of Bitcoin, down to the low from December of 22. That 50% retracement is 512.73. I need to update this 50%. And so that's where I entered into a short. And here's the cool thing about that. People ask me, what happens if Bitcoin goes up? And, are you going to lose on this position? I'm not that concerned about that because my thesis is not in the price of Bitcoin so much as if this ETF launches, people who have been using MicroStrategy as a proxy for Bitcoin are going to sell their MicroStrategy and just buy the ETF, because why would you want to buy into a company whose CEO, former CEO, has a history of being a fraudster? Yes, Michael Saylor had to pay massive millions of dollars of fines for financial fraud at the end of the dot-com bubble. What's that you say? He used financial engineering and got caught? What? Yes, go look it up. And he's massively indebted his company to buy lots of Bitcoin. And the company, their software doesn't make money. They lose money. So it's not a good company to buy. And so I want to bet against it for that reason. But also, if you just look at today, Bitcoin is up 0.72%, while MicroStrategy is down minus 5%. And then on earlier this week, on Tuesday, when we had this dip in Bitcoin, Bitcoin was down maybe 5% that day. MicroStrategy was down 8%. And then in the recovery, on Wednesday of this week, I believe it was, Bitcoin was up something like 5%, and MicroStrategy was only up 3%. So already there's a discrepancy there where Bitcoin goes up, MicroStrategy doesn't go up as much. Bitcoin goes down, MicroStrategy goes down more. So I feel still very, very confident in this this put position in MicroStrategy. But what was very interesting to me, I'll just clean this up. If we go down and we look at the price action for Bitcoin and the stock market, we use SPY up here and we use Bitcoin down here. So this is on the day of CPI. Bitcoin is still at that 50% level. Let's find it. So that was Tuesday of this week. Tuesday. We need to use ES, excuse me, instead of pi, because we need to see what happened in those particular months. So on the day that we had, let me make my markers here. Here's the news. Bitcoin did not respond very positively, but instead, let me get everything lined up here. Where's the 6 a.m.? There it is. So basically, while the stock market, stocks, equities, bonds, and everything else went up on the CPI news, Bitcoin went down. And that was surprising to me. I would not, if you had asked me on Monday, if people presume that interest rates are going to go down, what will Bitcoin do? I would have said go up, because all through 2022, as interest rates were rising and there was thoughts of more rising, people were saying that Bitcoin is now tied to interest rates, which it was, because a lot of 0% interest rate by Michael Saylor, by everyone else, people were buying Bitcoin on credit, essentially pumping the price up. And so you would think if we would get closer back to that world that, Bitcoin would benefit bullishly, but the exact opposite is happening. And I went out trying to find people that would, confirm or reject this thesis. And, it's just an observation now. We need to look at next month's U.S. jobs reports and CPI to see if this same pattern repeats itself again. Because it's going to be very interesting as rates begin to lower if Bitcoin will not get that benefit from it. And we got our first evidence that that might be the case. And when I say this to Bitcoin maxis, they poo-poo it because, Bitcoin number go up no matter what, right? Because it's Bitcoin, But I noticed this phenomenon of Bitcoin being interest rate sensitive before anyone else on the December 3rd jobs report. And that was back in, December 3rd, 2021. Bitcoin. That was this bar right here. This was December 3rd, 2021, and then that led into a Saturday liquidation event because, it punched down some lows. But the real question was, why would Bitcoin go down on U.S. jobs reports? And it happened right on the jobs report right there. And this red bar right here, if we go down and we look at the 30-minute, we'll see that on that 830 bar, come on. It's Thursday, Friday, give me Friday. There we go. Right there on that 830, yeah, right here, it was a little spike up. I love my spikes. I think that actually triggered a spike here. 8:30 a.m. U.S. jobs report came out, and then that day, because of that news event, Bitcoin began tanking. And I tried to point this out to people back then, and nobody really wanted to care because they just presumed that Bitcoin was the solution. Bitcoin is the life raft in the fiat economy, and anything related to fiat was not going to affect Bitcoin negatively because Bitcoin was going to win, and nobody wanted to hear it. But I am here with the unique advantage of looking at a chart of price action all morning, all day, and I see these correlations developing as they begin. And it wasn't until later into 2022 that people began realizing, I began reading on CNBC that, oh, Bitcoin responds to interest rates. Bitcoin is a risk asset. Bitcoin's correlated to stocks. I mean, it took months for people to realize as 22 developed that on these interest rate decisions the Fed was making, that was having an adverse, because interest rates are going up, effect on Bitcoin. And it was very readily apparent to me in the early part of 2022 that this was the case. So that's why I'm not saying that it's definitive, but this Tuesday, when the CPI numbers came out, looking at the price action for that day, it became very apparent to me that when stocks were up, Bitcoin was down on that CPI news. And I'm going to look for the December CPI to see if it behaves the same way. But just be aware of it. Be aware that one of the fundamental drivers of Bitcoin, interest rates, is now showing an inverse correlation to it. And I think people need to pay attention to that. And, this week, Bitcoin has been very choppy. Very choppy, very toppy. I don't want to short Bitcoin because when this ETF launches, it doesn't take a very, accomplished trader. You don't have to be a trader to know that, whenever there's some ETF news, that rumor gets spread that Bitcoin goes up. And if you're in a short position, you're going to get stopped out. So I don't want any part of that volatility. And that's why my vehicle for shorting Bitcoin as it hits this resistance is MicroStrategy stock. And so that's my play right now. I'll talk in my book, hashtag not financial advice, but that's what I'm doing. So that's Bitcoin and where we stand right now. The second thing I want to talk about is bonds. And I'm bringing up TLT here as kind of the proxy for bonds, but more importantly, I want to talk about, and by the way, let me take a stop right here while I'm rambling on to plug. If you guys got symbols to look at, things you want to talk about, questions you have, put them in the chat. Last part of the live stream, we'll get into it. If you want to tell me I'm wrong about my thesis on Bitcoin or anything like that, or have questions about this, punch it in now and I'll try to get to it. But I go out looking for people to disagree with me as a matter of habit, because I want to challenge my thesis to be more correct, because I want to invest, I want to make trades, I want to get as close to the future value of truth as I can. And so, I went out listening to Michael Saylor podcast this week. And one thing I listened and I heard was, let me see if I can bring it up for my history while I chat and I don't take too much time, because I'm not a big fan of Michael Saylor, but I listened to him on a podcast. Let me go to my history here, see if I can find it. And he misspoke. He said something that didn't make sense to me, and no one really corrected him.
And we know there's...
he's really loud. Hold on 1 second. So this was clipped from a YouTube video that said Michael Saylor Bitcoin 2024 prediction. No surprise, it will be up according to him.
I think there's only...
Because he has an existential need. Like his entire company's future is based on it. Let's see.
Three things that are 100% certainty.
Okay, so
as far as I can see,
what he talks about here is Basically, even though we don't know what happens with the ETF coming up, it could go up, it could go down. But what we do know is that we're going to have a halving. Now, I went to a Bitcoin meetup, Bitcoin barbecue yesterday, and I was calling it the halvening. That's kind of a boomer way of saying it because that's what we used to call it back in my day. We used to call it the halvening. Now it's just shortened to the halving. Whatever sounds better. But
thing is coming with 100% certainty. And as far as I can see, most of the selling of Bitcoin in the market is the Bitcoin miners that have to sell in order to pay their electricity bills
coming.
and
Hold on,
pay
listen.
their debt expenses and their operating expenses. So that amount of selling pressure is going to be cut in half in a few months. So we know that's coming.
Wait. So if they're going to be issued half of the Bitcoin they were before, how is the selling pressure going to be cut in half?
Let's selling listen to that pressure is going to be cut in half in a few months.
So if the miners are going to receive half as many Bitcoin, but they still need to sell the same amount to pay their electricity cost, how does the selling pressure get caught in half? In actuality, maybe what he meant to say was the selling pressure is going to be doubled because they're going to have half as much Bitcoin that they're mining, and they still have the same amount of expenses. So this, I don't know if it's a Freudian slip or a misspeaking, but no one really calls him out on that. I don't know why anyone wouldn't say, no, you misspoke. Actually, the selling pressure will double. So I don't know if he slipped up in his mind and he just presumed that Bitcoin will be worth twice as much at the point of the halving, which is a speculation. Maybe that's true, or if everyone that is a Bitcoin maxi is just so concerned about number go up that they don't really give any kind of question to the kinds of bullish narratives that people put out there. I really think it's the latter. And I've had a lot of good discussions with people about it. I'm okay with people saying Bitcoin is a fantastic tool for personal wealth generation. I'm okay with that because it is. In fact, it has a Sharpe ratio of 1.02 over the last 14 years, whereas the stock market only has a Sharpe ratio of 0.66. What a Sharpe ratio is a measure of returns versus volatility. So as an investment vehicle, even though Bitcoin is more volatile, because it's had such great returns, it is still objectively better than buying stocks. Now, according to the Sharpe ratio, objectively. But I'm just not moved at this point in my trading career to have to buy an instrument because it goes up a lot. Because I've seen what Bitcoin does. It has 70 to 90% drawdowns. So you can't really move me on that, but you can move other people. So I'm okay though if we say Bitcoin is a good buy, it's a good investment because number go up, big returns. But what I'm not really so amiable about now is this narrative that Bitcoin is going to change the world. Let's stop. Let's just stop. I know that's fun to meme, and the purpose now is to kind of meme Bitcoin higher with all these cool story bros. I was talking to a friend of mine that is absolutely all in on Bitcoin, and he works in Bitcoin. At least he works for a company that does Bitcoin conferences. And they had a conference, he said, a couple months ago in the Netherlands, and there they had Edward Snowden and Julian Assange's wife come and speak. He couldn't get any vendors or any financial institutions to even touch that conference. That's people talking about the freedom aspect of Bitcoin, the human, empowerment, the bankless society people, getting away from government and censorship. Those are the people. That was the focus of that conference. No sponsors wanted to touch it, but he's having one here in the near future, and he's got all these ETFs and all these financial institutions buying booths because they've got Sailor talking. It's going to be all about the investment potential of Bitcoin, which these financial institutions are going to earn commissions on. I've talked to some people this week where they're saying like, oh, do you think BlackRock, they're pumping the price because they're going to cash out? And I was like, first of all, I reject your primary thesis that BlackRock owns any Bitcoin to begin with. Like that has been a massive meme over the last couple of years that, oh, Wall Street's just tanking the price in 2022 so they can buy it cheaper. No, Bitcoin went down because that's what Bitcoin does when people get really overhyped in it. Okay. There's not this big conspiracy. You have no evidence that large financial institutions are buying Bitcoin. You just say that on Twitter and everyone shares it because it feels really good that the whales and the big money are buying what you're buying. It feels good. It feels warm. It makes you feel nice and happy with your investment when you think that people smarter than you or have more money than you are doing the same thing. It's just a feels thing, but you don't really know that's true. But now the message of Bitcoin is pretty clear. The ETF is going to launch. Number is going to go up because now boomers that couldn't figure out how to set up a wallet are going to buy Bitcoin. Now, do you think that's actually true? Do you think that boomers actually care? Maybe. If they see the returns and they want to buy into it, they want to put Bitcoin in their IRA. Maybe these things are true. But let's just stick with that. Let's not do this whole we're going to do away with the Fed with Bitcoin thing because, well, Bitcoin's now taxed. It's regulated, and it's pretty soon going to be potentially dominated by the traditional finance industry. And we're all happy with that because it makes our bags go up. Nobody cares about doing away with the dollar anymore. So let's just be honest. And if we're honest about it, if we're honest that it's a tool for personal wealth generation and the primary purpose of Bitcoin is for number to go up, then it falls squarely into my realm of price action analysis. And I'm happy with that too, because I can tell you that there are opportune moments to buy Bitcoin. The opportune moments this year were when Bitcoin broke out of the cloud, breaking its 2022 trend on Ichimoku, which I made a post about, and also on the banking FUD, the banking fear, uncertainty, and doubt that happened in March. It did a 50% pullback on March the 9th, and that was a great opportunity to buy Bitcoin in January and March of this year. If you did not buy it on those two opportunities, you wait, because now with the buy the rumor, sell the news potential, it is very, very dangerous. But that's not what people want to hear, and so it's a lot more clickbaity to make some post about how some other billionaire is doubling down on Bitcoin right now because it feels good. All right. That is all we'll talk about Bitcoin right now. I want to talk about municipal bonds. That's a much more boring topic, but for me, it's a lot more exciting. And the reason is because if we already assume that interest rates are going to go down, that means bond values are going to, you know what, Jen, I'm going to do a video for this because this is pretty deep, and I really need to kind of organize my thoughts, and I should do it. So I'm actually going to hold off on media wise. I know I kind of lied with the screenshot, but I feel kind of bad that I did miss out on that opportunity to talk about municipal bonds, because what happened this week after the CPI launch was I did a search on my Schwab account, which I was going to use, and those municipal bonds that I tried to that I found, basically you could put money into them and you could lock in a 30-year municipal bond for about 5.25%, 5.25% for 30 years. But really the nuance is it's going to be 10 because they can call those bonds. Again, there's a lot to dig into here, but specifically take away from this, municipal bonds, if you look at the callable date, you could take a 5.25% interest rate. You could take that for yourself for 10 years. That's the truth. And as interest rates go down, you could then turn around and sell those bonds for more. In other words, if you bought a bond for $100 at 5.25%, if interest rates go down to 4%, that bond would now be worth 117. If interest rates go down to 3%, that bond would now be worth 140. So we're not talking about YOLO 2x gains quite yet, but we're talking about some serious ways to grow and preserve capital with very, very little risk. I mean, the one that I put a lot into was the Columbus, Georgia Water Development Authority. I mean, they're going to, I guess, lay some more pipe, and now they're going to pay me 5.25% for the next 10 years for them to be able to do that. Now, if municipal bonds, the great advantage of them is that you don't have to pay taxes on the gains. They're tax free. Any bond that's issued by a state or a municipality or a city, those are all tax free. It's in the tax code. So that 5% is going to come to me tax free. That's a win for me as a libertarian. And it's not super liquid. It's not as liquid as stocks. It's not as liquid as futures. It's not liquid as Bitcoin. But you can sell that bond back for a higher price as interest rates go down. And so it's not like you're locked into it for the full 10 years. The comparison of this would be a CD. CDs, you have to lock them up for anywhere from maybe 3 to 5 years. And that's the only other way that you can get over 5% now is in a CD. But the problem with a CD is you are locked into it. And the value of the CD cannot increase with the difference in interest rates. Whereas the municipal bonds will go up in value as interest rates go down, because what would you rather buy? Would you rather buy a bond that gives you 5% interest, or would you rather buy a bond that gives you 3% interest? Well, clearly, I want the bond that gives me 5%. And if I want that bond, I'm going to have to pay more for it because they're a scarce commodity when all the new bonds are being issued at 3%. That's why bond interest rates and values are inverse. It took me a while to get it too. Values go down, interest rates go up, and vice versa. But that's the general premise of it. And for a long time, I've been saying and looking at TLT. I thought we hit a bottom. Being early and being wrong are often indistinguishable at the beginning of this year, because when TLT, which is probably the most liquid product out there for most investors to get into without doing a little too much research, I thought that we bottomed at the end of last year, and it was a good time to buy it. But now, rather than being at a 12-year low, bonds have actually come down to a almost 15-year, 20-year low. And a lot of people are seeing like, well, bonds have been so horrible. They've been bad. Well, why have they been bad? They've been bad because interest rates have been going down. And so the value of all the bonds that were issued at 2 and 3% are drastically reduced. But now, if the Fed, which we presume they will, we, as in the market consensus, now that inflation is getting under control, just hold on, just take that as a fact for a second. We'll talk about it. If we assume that inflation has come under control and the Fed no longer needs to raise rates aggressively, at some point they'll stall and they'll probably start lowering rates. Now, when I say this to people, they're always opposing it, telling me that, oh, the CPI numbers are fudged. Can't you see houses and used cars are way higher than they were 2 years ago? And inflation is still bad. Dollar going to collapse. Economy going to go to crap. Blah, blah, blah. Okay. I don't know what other numbers to use other than the ones that are published. And yes, I know that the Fed has tweaked them a little bit to maybe make them a little bit better. But I can either watch this YouTuber out here that has a commercial for gold. In other words, he gets paid a commission for selling people the antidote to fear, which is gold or Bitcoin or whatever. Or I can look at the statistics that are published by the government. As much lack of love as I have for them, they're still professionals that have advanced degrees. They study really hard economics to try to get right this whole economics thing. And then they release these numbers so that businesses, individuals, investors like me can make informed decisions about what the economy is doing. So I got to default to these numbers. And if you guys were not following it this week, CPI, Consumer Price Index, was better than expected. In other words, inflation is coming down at a faster rate than a lot of people thought it was. So we're getting back to normal inflation. Unpopular opinion in the Bitcoin maxi space or the doomer space, but things are actually getting better. I know that used cars and houses are still higher than they were before pandemic, but again, that's before pandemic. Yes, we had really bad inflation, but it's getting better. Unpopular opinion, I know. So, all right. Let's see. And thanks for being on the stream, by the way. All right. Well, that's taken up most of the time. I did get to touch on bonds. I need to make a more detailed video with like a how-to, because this involves going onto an account. You can do it on any investment account pretty much. I know you can do it on Schwab. I've looked on TD Ameritrade, which is owned by Schwab, but basically the Schwab account, or like if you log into the website, you can do it. So I need to figure out how to do that, and also obfuscate my account number and everything like that. So I'll make a video for that. I promise. I promise. I will eventually. All right, let's go to the comments. By the way, guys, if you have things to look at, I'll look at them for you. I got a lot of good stuff to look at, so let's jump into that here. Okay. And plug, if you got comments and you want to join Discord, where like I put out all my intra-week thoughts, especially about Bitcoin and interest rates and municipal bonds. Join that. It's free. I don't charge people for it, and I do this for you guys. I do this live stream to share what I think to be true, and also get feedback from you guys. Like when people ask me to look at stuff, I look at it, and you'll see me take a note here to go check it. There's some good trades that we've come from this live stream, no doubt. All right. That's a long list, Jen. Those are all knives, huh? Well, I can tell you right now, Robinhood. Notice how I've done this 50% here, like back in August, and it broke it. Yeah. Let's take a look at some of these. So, what is Ionic? We'll do kind of a lightning round to get to all these ones that people want me to look at. So, INOQ. Like everything else, we're going to go from the December low to here, and this is a short. That had a great opportunity to hold its 50% here, and it has decided instead to come down and get caught to the upside. I'm not bullish on that. OC, Owens Corning, original content. This is a glass manufacturer, by the way. If you are using a phone that has a glass touchscreen, you probably are using their product, and holy crap, October would have been a great time to buy this at $109.99. Like, holy crap. Yikes. Oh my goodness. What a beautiful 50% setup matching with a former all-time high. Ugh. Wow. It's these things right here that are just, by the way, in TradingView, you can go down and hit download image. These are just gorgeous to me. And they suck because I can't take advantage of them because they're in the past. But holy crap, those earnings, earnings dumping something to kiss a former all-time high and 50% level. By the way, guys, if you're just joining my live stream, if you're familiar with it, if you check it out every week, which I do it every week on Friday, you know that the two things I trust more than anything else in trading, whether moving averages or anything else, are 50% retracements and false breakouts. And oh, this is beautiful. This is a beautiful 50% setup that has happened in the past, and I can't take advantage of it. But this is just this is what I look for on a day-to-day basis. Just simple technical price action, something having a trend, pulling back to 50% and holding that level. Did it hit it properly? So the low there was 109. Yeah, 109.95 was the low, and 109.99 was the 50% retracement, and the former all-time high. It may have missed that. Hold on. I'm talking about this in depth. It's an opportunity that is gone. The high is 109.90. Didn't quite hit that all-time high, but it did hit that 50% from the low in June of 2022 to the high of September 2023. Oh my goodness, that is just gorgeous. Gorgeous. Perfect hit of 50% and right raw. So that's, I mean, again, this is going to be the way my investment strategy when it comes to buying longer term stuff is to first look for a technically good setup. And oftentimes what that can do is lead you into companies that are good. I actually don't start with good companies first, because by this point in my investing, fundamental investing, which was really popular in the 80s and 90s among our parents, the boomer generation, doesn't work anymore. Like maybe this whole PE ratio thing where PE ratio 14 is the gold standard will come to pass again in some distant future, but it just doesn't work now. But I like to find technical setups so that I can manage risk, so that I can take a trade, and then find myself, once I take some profit on it, find myself holding these stocks for however long they want to go to. One example of this is, of course, Caterpillar, which got in September of last year, had a chance to add to this year in May, again, based upon 50% retracements. And sure enough, I guess Caterpillar, as they make stuff. Okay. Speaking of making stuff, let me do another little tangent here. I'm gonna let myself get distracted from all uh, these charts. I had this thought this week. What made the aristocracy in the Middle Ages wealthy? Well, it's because they owned land. So what was land? Land produced wealth, whether it was food primarily, timber, wood, or they were using it for a mine to get some iron to make swords and stuff like that. I'm being very general here. This is my historical analysis, but the reason the aristocracy were wealthy and they stayed wealthy and everyone else was poor was because they owned the means of producing wealth. So, what in today's day and age produces wealth? Businesses, companies. Whether it's Microsoft making software, which is something we cannot taste or touch, or Caterpillar, which makes equipment that people then use in their businesses to make other stuff, clear land, etc. The thing that has produced wealth for people, and this is one of the great accomplishments of capitalism, is that through stocks, people can buy ownership in the revenue, the earnings of these businesses, which actually in our modern economy, in our modern world, produce wealth. And this has been kind of the realization that I've come to through my decade plus in cryptocurrency and looking at the stock market in that time too, is cryptocurrency right now does not generate wealth. Now there's a lot of people that say that Ethereum, people are going to use the smart contracts to create NFTs, to use it for smart contracts, for legal things, but they're not doing it yet. Bitcoin's been around since WhatsApp. It's been around since Uber. It is essentially just software, but nobody's using it for anything. They definitely can't use it as a payment service because Venmo is just, and Zelle are just really so much better. And I need to do a little more research on that, but I talked to a friend of mine last night at the Bitcoin meetup that we have, and I asked him, so like I've been hearing some rumors about Lightning Network not being good anymore. Can you expand upon that a little bit? Because he's been a big Lightning Network person. Like he used to hold these meetups where they would literally come in with this book, this thick book about how to use Lightning Network. Now, do I want to, read a book to figure out how to, use a payment service? No, I want to go on my phone and hit click and send the money to my friend for lunch. That's what I want to do. So that's here and there, but it was kind of interesting his answer. He said, "Well, Lightning is very useful if you know the person you're sending money to." I'm like, okay, well that doesn't answer my question. But so is Lightning good now? Is that the future of payment services of Bitcoin? He was like, the technology, the idea is sound, but Lightning is not. I'm like, wow, that's quite an indictment of the what people were saying was going to fix Bitcoin's problems. Like, wow, that's not good. I don't know the technical aspects, but apparently, I think that what has happened, and they haven't made a big news about this because that kind of news would not be very bullish for Bitcoin. But um, Lightning Network was supposed to be a layer on top of Bitcoin because right now it costs you somewhere like $2 to send Bitcoin, which is fine if you're sending thousands of dollars, but not if you're trying to buy coffee. It's also quicker than waiting for confirmations. It was going to fix a lot of the problems with the base layer of Bitcoin, scalability, number. But apparently, there's been a vulnerability that's been exposed in Lightning Network that allows people to steal money. Imagine that. People are criminals out there. And so I don't know the technical details because it hasn't been very widely circulated because that's, again, not very bullish for Bitcoin. But apparently nobody really recommends using Lightning Network anymore. So That's not good. Doesn't mean Bitcoin's broken. Just their attempt to fix Bitcoin is not going to work. So anyway, that was quite a segue from using 50%, but I'm in a state of flow right now. All right, let's keep looking at stuff. Tesla, of course, we got to talk about Tesla. Tesla, people keep asking me today, this week. They always ask me when to buy Tesla after I've already bought it and published on Discord that I'm buying it. I even have taken the opportunity at times to ping specific people that have asked me over the years when to buy Tesla. I'll do it at their name in Discord, like, hey, this was back earlier this year. I was Tesla. I said Bitcoin. I'm on the Bitcoin mindset. Tesla did a 50% retracement of its whole January cycle, and of course, people would come into Discord and they'd ask me, right here, hey, can I buy some Tesla? And I'd be like, no, you can, and you may be okay, but I'm waiting for it to pull back to 160, the 50% retracement of the January bull run. I'm being patient. So when this happens, I come back and I ping the people that asked me here and say, hey, I'm buying Tesla now. I told you I'd let you know. And usually they don't respond. They came to ask me, and then they don't. And when I ping them specifically, they ping me, I answer. I ping them, they don't. And then inevitably they come back somewhere right around here during this June bull trend and say, like, hey, should I buy some Tesla? And I'm like, no, you should have bought it when I pinged you. And then it goes up, and I don't know if they bought it or not. Now people are asking me, hey, should I buy some Tesla? I was like, no, I'm waiting for 200. And it does this number, and they're like, oh, should I buy some Tesla? It didn't hit 200. I'm like, no, I'm still going to wait for 200. And so we wait. And then I buy it at 200. And I said, and I'm like, okay, everybody, Discord, it's back to my level. I'm buying some more Tesla. In fact, I'm buying a lot of Tesla because now I actually own a car, and they're freaking awesome. And I want to own some of this company because they make the best cars out there, in that every other car you actually have to drive yourself, which is automatically inferior to any other gas-powered car. And then, in the weeks that follow, they're like, oh, no, did I miss it? I was like, well, actually, interestingly enough, this Thursday, November the 9th, it pulled back to a 50% retracement of the 50% retracement. And here's the big 50% retracement of the whole 2023. Hit 200. I went ahead and did my thing. But on this date right here, someone actually asked me, ping me, and I was like, I'm already in. So yes, I still think it's a good thing to own, but is it a good thing to buy now? Well, hashtag this is not financial advice. So don't come and ask me like, what should I do? Like, I've told you what I'm doing. I've told you why I'm doing it. You can like it or you can't. Take it or leave it. I'm not going to give you like day-to-day updates on yes, you should or yes, you shouldn't, but this is what I'm doing. What I did on this day actually was, because Christmas is coming up, I have a nephew and two nieces, and I actually, with their parents, set up a custodial account, because when they're 18 years old and they don't appreciate anything, I want them to at least let them know that their crazy uncle Norok put money into stocks for them 18 years ago, and now, wow, they're up a lot. Now I have money to spend on booze and makeup, whatever they wanted to spend on in college. And hopefully they remember their crazy uncle for that. That's all I want them to do, just be like, oh, wow, my uncle, he put money into stocks almost 2 decades ago, and now I have a lot of money to do fun things with. That's pretty cool. That's a good lesson to have about the long-term effects of investment. So for Christmas, I bought each of them a share for about $200 and I think $10. I sent that to the parents to do, and so that's what I did on that Thursday, because I actually had forgot to buy on 200, and I forgot that Christmas was so close. So their Christmas present was put in there, and I don't know what the future is going to hold, but we're looking good so far. So that's Tesla right now. All right, Pfizer. Ouch. Valley of risk, not good, not good. I was talking about this as a dividend yield stock at 392. Looks like back in 2020. That's the last time I've done charts on this. Was that it? Yeah, I must have. Sometimes I forget why I put these notes on here for different live streams of the past, but probably is a good dividend play. I don't know, but man, they've really fallen off, haven't they? Jeez. So when something is in free fall like this, what I look for, if I really want to own it, is I'm going to look for what I call a Tinkinson recap. And that's this red line right here. It's the TS. It's from Tinkinson is from Ichimoku. It's basically the 9 period moving halfway point. And that's basically going to be my first sign that, hey, this thing might start to turn around. If this happens at, say, a major low, like the COVID low, which now it's looking like it's trying to hit that COVID low, actually. Wow, it really sucks when you don't have vaccines to sell to people. Yeah, wow, man. It was really good while people were really afraid of this virus that was going to kill everybody, and the media was all telling you that you had to take this vaccine or else you and your grandma were going to die. That was really good for business, wasn't it? Oh, well. So, yeah, I'd wait on this. And then wait at least until it crosses back over the red line here. At least gives you that sign that this bearish trend has started to cease. There's another virus around the corner. Yeah, we'll see. I think that people are going to be a lot more appropriately skeptical of any diseases that come about because we were all very shocked. I was surprised. Everyone was surprised. I'll give people that. They were very surprised about the pandemic because we hadn't had a major worldwide pandemic since 1918, virtually 100 years past. And so no one in living memory knew what was going to happen. But we all kind of got a little crazy, didn't we? Anyway, moving on. Let's see. Zoom. Well, I mean, that's not really, that's kind of a non-starter now, isn't it? I mean, we all kind of lament the fact that video conferencing is kind of inferior to interpersonal conversation. I mean, these things are great stories, like things are, in a moment in time. You know, it was very clear that Zoom was what everyone was using during the pandemic, but now people were having to go back to work in the office. It was a cool story, bro. Then it's not a deal now. The price is probably appropriate. That being said, if you really want to try to buy a bottom, no, I'm not interested in Zoom. All right, let's go to the rest of the chats. Let's hit things. Silver, yeah, let's look at silver. So I'm going to use the futures for silver. We can use SLV. I haven't really looked at precious metals in a while because there was a trade on gold that I took. It was basically this false breakout in May of this year. We're looking at a weekly. This is a false breakout. Like I've said before, I trust false breakouts better than anything else. And I took it down in this little bear trend until it hit the 50%, about 1850 on GC. And GLD was how I use that. I basically use GLD as a proxy. If you go to the daily, it's a little bit clearer. When GC did... Oh, I didn't have my spikes on. There we go. When gold futures did this spike in May, false breakout. In other words, there was a high in April, price pumped above it, and then closed back inside it. Again, the two things I trust are false breakouts and 50% retracements. Throughout the course of this year, I was very open that my position, which I took right here on gold short, worked out until it got to here, took profit, and now it's kind of come into a little bit of malaise. So that was a win this year. Good. I did that with GLD. And it's pretty much the same thing there. A little bit different price action, but there you go. So with SLV, do I see anything in silver there now? Just from looking at it immediately, I do not. It's very choppy price action. It's going to do what it's going to do. I don't see an opportunity. I focus on opportunities. It's not what I think something's going to do in the future. because that's trying to really get into the astrology of men, trading, what is it, technical analysis. I'm not trying to predict the future. I'm trying to use technical analysis to find opportunity, like we did with Owens Corning or Tesla, pulling back to a 50% level, or in the case of gold, doing a false breakout. When I see something like that, when I see a unique phenomenon in price action, that's when I'll take a position. And actually, everything kind of follows after that. If you give me a symbol of a very liquid object, I don't care what it is. If I didn't know what the company was, if it's a good tradable setup, I'll take it. And then once I'm in the position, I'll be like, oh wow, this is a company that probably makes stuff that people are going to want in 10 years. Maybe I want to hold on to it. I mean, one of the great trades of this century, in my opinion, is Amazon, which at the end of last year, beginning of this year, pulled back to its 50% retracement from 2001 to the all-time high in August 21. And it's Amazon. My girlfriend's not going to stop buying stuff on it. You aren't either, okay? People are going to keep using Amazon. This is a company that you're going to want to hold in your portfolio for a very, very long time. And so for you to get it at half off earlier this year was almost a no-brainer. I hope people did. I know I talked about it. I mean, this is just so freaking obvious. Here's the thing. I mean, we're only up how much? We're only up 50% on this position from earlier this year. That's only 50%, right? I mean, come on now. Like, I can't buy a Lamborghini with that. Clearly, I need to sell it all right now and buy Bitcoin, right? All right. As far as silver, man, I got a lot of friends. This is kind of anecdotal that lament the fact that they were really into Ron Paul in the 2000s and basically the 2012. Oh, yeah, that's what they said. They say they got really into libertarian philosophy of the fiat being really bad in 2010, 11, 12. I bought some Bitcoin around then because I thought Bitcoin was just cool. But they bought silver in this period right here. They basically bought silver on this big run up, and over a decade later, well, I don't really see it. There's just other things that you could be putting your capital into that would give you a better return. Really, I'm very not amiable to this whole world is going to end narrative. That if you go on YouTube, you're going to see tons and tons of videos with thumbnails like a crash is inevitable. I'm not really into that kind of stuff as investment theses. I'm not really into that. That you're banking on a really bad thing happening, and it may, but basically you're going to have worse problems than what the price of your portfolio is doing at that point. You're probably going to be wondering like why there's no food to buy in the grocery store. So I think that's a whole different mental calculus when you really kind of try to follow the logical conclusion of what a lot of these YouTubers and people that try to sell you gold and silver are saying. That things are bad, things are going to get worse. Okay, all right, I hear you. Things seem bad, but what do I do? Well, in the event that where's that meme? I did talk about this week, didn't I, Jen? Let me go back to our little chat here and find that ammunition thing. I had this discussion with people earlier this week. Yeah, here we go. So this was a meme that I saw that was haha funny, but I really actually dug into this. So this is a pallet of NATO 5.56 round ammunition. This is what you use in an AR-15, and this was basically a $400 box, which is 1,000 rounds. That's about 40 cents a round. And as an anecdote, I remember several years ago, back in around about 2006, I was working in IT and I went to a client's house to help him with his home computer. And he had delivered a couple of boxes of this ammunition that he was going to shoot with his son. And so I remember asking him, like, wow, like, how much does that cost? And he said, well, it's about 25 cents a bullet. I was like, wow, that's a lot. You know, every time you know, one, two, three, four, that's $1. Ugh, well, it's a hobby, I guess. But it got me to thinking. So basically, from 25 cents to 40 cents this year, you know, in the same span of time, that's about a 60% increase in price. And I bet you that if you had ammunition that you bought in 2006, it's just as fireable as you would buy new ammunition today. So, I mean, it's still the same utility value. So, what has inflation done in that time since 2006 till now? Inflation has gone up 52.7%, and the price of bullets have gone up 60%. I actually went and looked when I was doing this week, and you can't buy bullets for 40 cents a bullet now. You actually, this kind of ammunition, the 5.56 ammunition, is about 60 cents if you try to buy it now. So, TLDR, if you're really concerned about having a currency, and if you want to put your money in something that's going to hold its value with inflation and then also be useful in a SHTF scenario, ammunition is what you need to be buying, not silver. Now, of course, storing it is, of course, an issue. You know, takes up a lot of space. But you know, I was talking to a friend of mine today. I was like, do you want to act upon this? Like, do you want to try to buy some ammunition and then rent like a storage building? Because essentially, if over the course of almost 20 years, you've got a difference of about 10% between inflation and this, you could make a case that paying the rent on a storage building is worth it, because ultimately, if you needed to, you could sell a pallet of it and have a down payment on the house at any point in the near future. So that's a little bit of a tangent there. All right, let's start finishing up all these things. We'll look at your stuff here in a second, Casey. Casey's talking about Palantir. Ooh, that's interesting. Let's see. Okay, Solana. Yeah, so yesterday okay. I hear you. I hear you. All right, let's go back to my watch list here. I've been told by multiple people that I need to start looking at Solana. Oh, look at that number go up. So people have been yeah, of course. People are telling me to look at Solana because number is going up. Very good, very good. I hear that it is in many ways better than Ethereum. It's built for scale, for doing smart contracts. It does everything that Ethereum does, but better. Now, to be fair, 2 weeks ago I went to a Bitcoin Maxi meetup, and of course they were poo-pooing Solana. Here's their argument. I'm not saying I believe it or know anything, but they said that the Solana Foundation is subsidizing a lot of Solana nodes. I don't know if they mine, but the nodes that operate it, basically the Solana Foundation is they're sending them money to keep them working, which is a sign of it not being decentralized. But again, that's coming from Bitcoin maxis who decentralization they think is like the highest value. I would say that Solana, decentralization is not really necessary for this thing to work. So I don't know that much about Solana. Will it continue to outperform Bitcoin? I don't know. Clearly, it is exhibiting a little bit more mooniness than Bitcoin, definitely outperforming. But like all things, I'm going to do what I just did, which is I'm going to draw a retracement from September up to the high that it made last week, apparently. And I am not going to consider any kind of position until it pulls back to 42.75. Those are my rules. Now, maybe it will keep going. It seems to be very, very strong. As I said earlier, when it comes to the red line, the Tinkinson, it's a strong bullish trend. I mean, yes. So where are we going to potentially get a pullback? Let's look at our two major highs. Our high from March 22 down to the low, and our all-time high down to the low here. So the two levels of resistance, and this actually matches up very clearly with the lows that it made in 2022. So this bullish trend has free range to go up to about 75. So if you're already in it, I think you're good. You don't need to take profit yet. I think if I am looking to purchase some, I want to see a pullback to a 50% retracement. But honestly, if you are someone that is far more risk loving than I am, you can be looking for things and you can just play this thing up. So that looks good. That looks good. People have been telling me about Solana now. Now I know why, because number go up. These things, I love this quote, and I say it a lot. There is no better advertisement than a rising price. Nothing better. You know, people in the depths of the bear market of crypto a couple months ago, they're like, "How can we get people interested in Bitcoin again?" There's no better advertisement than a rising price. There just isn't. You can tell people the merits of something, how great it is, but they're going to look at the price and they're going to see it's going down, and they're going to be like, "But price go down, but it's cheap." And then you'll say, like, "Well, don't you want to buy something that's cheap?" It's like, but much prefer when number go up a lot. Then I think I get number to go up a lot for me. So you're good to go. Hold on. I like to keep this list very sparse, so I'm going to take off Ethereum, Bitcoin, and I'm going to put Solana on this list. I'll keep an eye on it. Ooh, Coinbase, Solana. I'm going to use Binance. No, I'll use a trading view one. I hate Coinbase with the passion of 9,000 suns or more. All right, cool. I'll keep an eye on it. I had a friend of mine that really had me watching Solana for him last year, and hold on. He bought it at 100 when it was around right here. And then when it got to one, and here's what he told me. He said, "Hey man, I want to put a pool in at my house." I was like, "Okay." It's like, "So I'm going to buy Solana. I'm going to put $1 million into Solana at 100. Will you tell me like how to trade that?" I was like, "Yeah." So when it pulled up to 140, it hit this resistance here. This is in April of 2022. I was like, "Hey man, you said you needed $300,000. You got 400. Sell your Solana." Did he listen? No, he got greedy. And so when it finally came back to this right here, when it came back to break even and broke, I was like, well, actually, he bought it at 100, right? Yeah, when it finally did this number right here and it spiked out, I was like, get out at break even. I called him up and I said, do it. He's like, do it. This is why I don't try to give people personal advice, because that kind of stuff annoys me. Like, you had what, anyway. So that's just my recent experience with Solana back here. And fortunately, I was able to keep him from really hurting himself. He would still be back down 59, but like I said, you're good to 75. That's where I'd start looking to take some profit. But I just temporarily I can't buy into things like this once they've already gone. What did it really do? What can we learn from this? I would say that I should have been watching this a little more closely in this is just last month. Okay, so basically let me fix this. Well, let's just do this. Hang on. So the thing that I trust secondary, third, and dairy to 50% retracements and false breakouts is Ichimoku cloud breakouts. And one of the things that I should have been watching for, trading view, stop, is for, why is this being annoying? Okay, is for a situation like this where, that's good too, because if you notice, Solana pulled back to, look at that, take off Ichimoku. Nice little 50% retracement level there on Thursday, October the 12th. So if you were really, really looking to buy some Solana, you could have taken a trading position there. And then when it got out of the cloud with a momentum out, you could have looked at that as a bullish breakout, a confirmed bullish breakout. And so basically, October the 20th, if I had been looking, I wish you would have come on, Brian, and said something to me. That would have been a really, really good opportunity to actually grab yourself some Solana. But lacking those two opportunities, I'm gonna sit down. There's money to be made, but the problem is this. The problem that I look at is this. So if my target is going to be 75, and again we're looking at the weekly here, it's still not bullish on the weekly. In other words, based on that daily breakout thesis, where we want price to get out and we want momentum to get out at the same time, that is going to take a little while to actually come to pass. So we can't just go YOLO bullish on it quite yet. So if we come up to here, if we say that, okay, that's where we need to reasonably expect this trade to go, then if we take our little long prediction here and we say, okay, well, there's where my target is. The question is, where's my stop? What makes sense for me to have a stop? Yes, you need to have a stop. You need to have a stop because, believe it or not, crypto can go down. I know that's we're starting to kind of forget that, aren't we? So if I'm going to do a stop on a breakout, it needs to at least be about a 1-to-1 or really a 1.5-to-1. So the basic stop I would want to have would be about right here, okay? But like I said, I'm looking for a potential to maybe do a 50% pullback at any given time. So our stop needs to be below that 50%. So now our risk reward at this point in the trend is now less than a 1-to-1. And so from a pure technical trading perspective, I can't buy this according to my rules. Like, I need to catch things when they're a good risk reward opportunity, or else I'm just going to have to wait patiently, which I'm more than willing to do. Just like I was willing to wait for Tesla, just like I was willing to wait for Bitcoin, just like I'm willing to wait for anything, because I'm not in any hurry. I'm just not. And I really hope that people can kind of internalize that as well. I need a light in here because it's getting kind of dark as the sun goes down. All right, let's finish up all these commentaries and stuff like that. Let's come to something here. Okay, so Deere has a great setup. All right, Deere Company. Dear me. Auto data. It's kind of choppy. It didn't really pull back to its 50% level. The COVID low to the high that it made. It had an opportunity there in July of 2022. Didn't quite hit it. And right now, if you notice, it's kind of poking up against and failing to break higher. It's kind of in the middle of nowhere on Deere. So not really seeing the opportunity there. I think I did TAR. I did talk about Amazon. Amazon. I mean, I hate to be like this to people, but a lot of these opportunities this year have already happened. You're gonna have to find new opportunities. But basically, Amazon was a great opportunity at 94.46. I know that doesn't help anybody now, except for the purposes of learning. But again, going back to the Solana example I just talked about, you can sit here in a big trend of something going moon, even something like Amazon in 2021, and Amazon going moon and everything going moon, and you want to own Amazon because everyone uses Amazon, and you still need to be patient because it will eventually pull back, and then you can chart it and you can find an opportunity. So with Amazon, as this thing goes up, I'm already in it. My apologies, but maybe it will do like Tesla did and do a ladder term pull back to 114. At that point, I will get interested in it again. But Amazon is bullish, and it's probably trying to come up and retest its all-time high of 180. Given the current trajectory, that could happen sometime next year. But maybe you'll get a pullback, maybe you'll get a setup. But earlier this year in March and all that time when people were worried that the U.S. dollar was going to fail because banks, that was a great time to buy stocks, guys. I mean, Warren Buffett said it, be greedy when others are fearful and fearful when others are greedy. March of this year, I mean, we can already look back and see that March of this year right here was a really good time to buy stocks. And I want you to kind of internalize it. I want you to think about it. People were really fearful. Everyone was really fearful that all the banks were going to fail and we were going to be bartering for food, I guess. At the time, I didn't know it to be true, but I really felt like it to be true that this was a great time to be buying stocks. And everyone I said that to was like, but reasons. Well, let's move forward into the future. And the next time everyone on YouTube is talking about the end, let's go buy some assets, okay? Because they are at a deal because everyone's watching those YouTubes saying that the world's going to end, and they're all selling their assets. They're not buying it. That's when you need to start. But I mean, guys, like when it comes to the stock market now, a lot of people thought this October dip was going to be it. They thought that all their puts were going to start printing. They thought that the market was going to crash. Hold on a second. Hold on a second. I'm going to be moving finally to my newly renovated condo, but I've just been kind of lazy about setting up my office. I'm still at my bedroom here, so I need to move my computer, and then I'll do some fancy lighting and stuff like that. But basically, guys, I mean, at this point, you need to really be thinking that we're going to test and maybe possibly break the all-time high of the stock market for the year. I know it was a little dicey here in October, but stocks go up. I know no one else really wants to tell you that because they want to sell you on some gold, or Bitcoin. But investing in assets that have the potential for compound appreciation, that's the way you get rich, slowly. Anyway, all right. Let's see here. Doge is ready to break out potentially. All right, well now. Oh, 5%. All right, let me take this seriously. Hang on. Okay. Look, this ETF in Bitcoin is going to drop, and therefore any and all bullish news is going to kind of be exhausted until the halvening. A lot of this bullishness you see in shitcoins is going to be related to the fact that people are starting to get really excited because Bitcoin's been going up, everything's been going up. It is fun. It's a fun time to trade, but don't get wrapped up. Don't be drinking the Kool-Aid. That's all I'm going to say about that. Like, these are fun, but they're not going to make you rich. They're not going to preserve your wealth. You need to be looking at some, like I said, some companies that actually produce stuff, or some bonds, which if interest rates go down are going to go up. I mean, but you can do a little bit of fun here. You can put a little small portion of your wealth into these and have some fun, but don't drink the Kool-Aid, guys. Don't drink the Kool-Aid. All right. MBG. Mercedes-Benz. I mean, I'm a very egotistical Tesla maxi at this point. If I bought a Mercedes, it would probably be a higher build quality. In other words, I wouldn't have this little creaking noise in my steering column that I'm going to keep bugging Tesla to fix for me. If I bought a Mercedes, which is higher quality, but I would still have to drive the car myself. Now, to be fair, when I drove my ex-girlfriend's Mercedes, she had a 2015, I think, C-Class. And so it's not like a high-end by any means, but the self-driving was quite comfortable in it. So I would say that they're actually pretty good. But I again, it looks a lot like Deere, where it had an opportunity to come back down to a 50% level in 2022, but didn't quite hit it, and it's failed to make higher highs. It's just kind of in the middle there. I'm a Tesla maxi. I mean, I think that at some point in the future, I mean, you really need to find someone or go to a dealership and have them show you the full self-driving feature. It is truly amazing. You do not have to drive your car. They can't say that because people are by nature Luddites. Look that up. That means averse to new technology. And people are just so scared of the idea that there will be not a human driving a car, even though humans produce all of the accidents on the road, and Tesla's accidents per mile is an order of magnitude less than humans. People are still scared of self-driving, but it is truly amazing. And they have developed a database, a computer that can drive a car. No other company has done that. And so eventually, as it gets better and better, and all these other companies are restricting their self-driving, not building an artificial intelligence database, these companies are going to be faced with what they're doing now with the Tesla superchargers. Mercedes-Benz has already made a deal with Tesla to use their supercharging network for their electric cars. Mercedes-Benz is not going to make their own chargers. They're going to pay Tesla to use their charging network because it is already there and it is better. Eventually, companies are going to say, okay, self-driving is in high demand because no one actually wants to drive their car and stop and go traffic, because who would? It sucks. So we can't really catch up to Tesla's self-driving, so we're just going to license it. And Elon's already said that he's more than willing to license it, and he should. We need to stop driving our own cars because it's dumb. Why do you want to spend hours focused your mental energy on this monotonous process of driving a car? I like driving my car. Bullshit. Go sit in traffic. Tell me. I had to sit in traffic for an hour today, and I was able to do things like productive things like browse TikTok or Twitter while I was driving. And that's great. That's what we need to be doing instead of sitting there like, screw you. No, I just press a button, I sit back, and I just let the car handle all that stress for me while I talk to friends and look up memes, other productive things. And I just don't think people realize we're there yet. And Tesla has it. And Mercedes-Benz will probably have to pay Tesla for it. So, very good cars, high quality build, but it's just, you still have to drive them yourself. I don't get it. So, to me, it looks like Mercedes-Benz is breaking down into a bearish trend in the Ichimoku. Oh, well, yeah. Yes, it is. But so your support is going to be about 47.54. So, I mean, you're already in agreement. So, that's my opinion. I would say that if you're going to take a short position, you got to like knock that as your target, and that would probably let you put your stop somewhere above this Ichimoku, basically breaking above the Kijun-sen. So 1-to-1 breakout would look something like this. You could pull that off. Oh wait, it's actually here, so it's even better. So if you have it, here's a little. Let me give you a little trick in Ichimoku. One of the things you can do is you can look for price to pull back to the Senkou B, and then look for a short. You can play a breakout as a pullback. Or in the case here, what will be really cool, if you still have that thesis, is if you look for it to pull back to the Kijun-sen, which is the 50% of these last 26 bars. So either one of those would be a good pullback. But yes, good short. Oh, goodness gracious. Okay. All right. Let me start really doing. All right. So Target. Sorry, Hen. I know that you put that in earlier. So Target is one that is in my kind of friends and family portfolio because of their request. The thing about Target is it has already failed me. Here's the 50% retracement from the March 2009 low to the all-time high, December 2022. And so this monthly chart right here, same thing as Amazon. This is entirely comparable, okay? Amazon, Target. They both sell retail stuff, okay? So Amazon hit its 20-year 50% and has gone up. Target hit its 20-year 50% and went down. And so while we have had some pretty nice earnings, it has not fixed the problem of the price action on Target. And I'm actually kind of being patient to liquidate my Target position for my friends and family, because I don't own this myself for that reason, but they really wanted to put it in their portfolios. And I'm glad I didn't liquidate it yet when it was going down, but I don't see this move in Target as a buying opportunity. I see it as a getting out of opportunity. Hashtag not financial advice, but that's the way I see it. Because it's already doing what we talk about when we look at other things. I mean, what was the one that we were looking at earlier? What was that one that Jen put in there? Was it O? It wasn't OC. Was it CAT? It was Pfizer. So Pfizer is a good example of something getting to its 50% retracement level and just basically when I look at the chart for Target, it looks like this to me, where we have our 50% level, which it came down, failed to hold, and now we've got a little run up here. Okay, now it's coming up, and that to me is the opportunity to acknowledge this thing has failed and let's get out before something like this happens. Same thing happened with Zillow. When it broke it, I still got it annotated from past live streams. When it broke out here, let you get out before that happens. And so when I look at Target, my brain, my pattern seeking brain, is seeing where this thing broke its key level it should have held. It is starting to come down, and now you've got one of these legs up that is a potential for you to get out before it starts to really, really start to hurt. So, yeah, that's what I see in Target right now. All right, Disney comeback. Probably yes. And this is something I've talked about in, well, there you go. See, last week we were talking about this. I've already got this marked off. Let me start over. So there was what I'll repeat what I said probably last week and every other time. It became very intriguing to me around here, basically back in the late summer, early fall, August, where everyone was saying, I don't like what Disney is doing, therefore I want to short Disney. And I was like, hey, guys, wait, hold on. You're right up against the COVID low. Like, how much are you really going to get shorting Disney at this level? I mean, yeah, it could break it, but that's a major, major low right there. And we need to presume in price action analysis that price will probably respond to major lows and major highs. And so what did it do? It came down, hit that major low, and now it's bouncing off of it, as one would expect. And so it became very intriguing to me when everyone's wanting to short something at a major low that, oh, wait a minute, that's kind of bullish because everyone is wanting to do that. And so, yeah, I do think that you're seeing a rise off of that low. So you don't want it to break that low because that would be exceedingly bad. But right now, Disney is making a comeback. The price of Disney is. What's up? All right. What else we got to look at? Okay, so I'm going to get to Casey's because Casey has good breakouts here in just a minute. But let me finish up what's in the chat. If you got something else, put it in right now. CCL, actually, I just looked at CCL for a friend earlier. Well, let me look at that. So Aura Innovations. No, that's a no. Sorry, Richard, because it's already broken the level there. It's in the value of risk. I can't say good things about that. AMD, has it broken? Has it got back above its level? It is. I would say that AMD now is potentially bullish, but it's just been kind of a weird instrument. Not clear, not a very clear setup for me. If you're long it, stay long. I don't see it. I haven't seen an opportunity that I really felt good about. I've been really struggling to analyze this effectively. And if I can't really come to a definitive, like, okay, I like this or not, I'm not going to take a trade. I'm looking for opportunities. I'm looking for setups, but it looks pretty good. On is that on semiconductor, again, broken through its level. UPS, I know we talked about this last week. UPS is, again, just like Target, broke its 50% level at 157.86. This leg up is an opportunity. Hashtag not financial advice, but when I see something like this, immediately I know I don't want it. If I have it, this is my opportunity to get out before the risk of a free fall. I mean, I've shown so many examples of stocks where once they break that key 50% level, you enter into what I call the valley of risk. And that is everything that lies below the break of the 50%, the major trend 50%. You don't know when it's going to stop. You sit there bag holding, and if you sell it, it's going to go up. It just happens like that, doesn't it? If you hold on to it, it's going to keep on going down. So you don't know what to do. and you enter into this dark valley of despair, and it's the valley of risk. And so you're in a bad place here on UPS and Target. It could go up, but it'll only go up if you sell your position. That's just the way things happen. But if you hold on to it, it's just going to keep going down. So, yeah, I don't like it. I was pretty bullish when it hit back in October, but no. But going back to specifically what it seemed your theme, Richard, if you're looking at semiconductors, if you're looking at advanced processing, I mean, you can buy AMD, you can buy ON because they're struggling, and so they're relatively cheaper, but the winner is pretty clear, and that's Nvidia. And I know it's really, really high up there, and I don't want to buy something once it's gone up a bunch, but you're kind of chasing after a deal where the winner has already been established. And so if you're thinking in the theme of I want to get long semiconductors, I want to get long processors, then you want to be in the winner. And Nvidia is clearly that. As far as like a technical setup that I like in Nvidia, it's not there. I actually wanted to short Nvidia. I wanted to short Nvidia a couple of and people have asked me this. Who asked me this week? Someone in private chat was saying like, hey, like I want to like buy some puts on the market right now. I'm like, why? It's like, well, everything's making all-time highs. I was like, okay. You don't just start shorting the market because it's going higher. That is a very bad idea. The reason that I wanted to short Nvidia was because not 2 earnings ago, it's been, I think in the summer, it did what I saw was a potential false breakout on that earnings right there. And so I didn't immediately buy puts on it, but I was very much watching it. And as time went on, I didn't really see the type of setup that I wanted to go short. It didn't even break out of the Ichimoku cloud with a certain, it did kind of there, but it wasn't really breaking that low. Anyway, I didn't short Nvidia because I needed a really good reason. I needed to really watch it because when something's going up, you really don't want to stand in its way. That's why I'm not shorting Bitcoin. But I'm glad I didn't. I mean, these are like little tricks and tactics and rules that keep me from losing money, that I don't just automatically bet against something because it's going higher because, well, Nvidia's back up to its high now. And maybe I can't really articulate the rule that kept me out of it. This was more just kind of a feeling. But I was talking for the better part of August and September about like, I want to short Nvidia, I want to short it, but I'm not because it's just not there. But I mean, it's strong. It's strong. And if you're thinking, I like the semiconductor space, I will say this though. What's Intel doing? Buy Intel. If you want a deal on the semiconductor industry and you don't want to buy Nvidia, guys, this is why I do this live stream, because I am remiss that I have not been watching Intel. I need to next week. I need to do something to Intel. Bullish breakout, clear as day on the weekly. Boom. Boom. The only thing that is kind of concerning about it is the fact that it's coming right close to that major 50% at 46.61. So that may give me pause. That's going to make me be a little more rigorous in my analysis. Really, the place to buy it would have been in October there, but I wasn't really looking at it, like I said. But if you're looking at something, AMD is just confusing because of its price action. I mean, it's just it basically should have gone. AMD should have gone here. It should have gone moon there, but it didn't. But now you have a fresh opportunity in Intel off the weekly. That's Intel, some other stock. Hold on, Intel on NASDAQ. But this week, really solid move up. You got to ask yourself this too. Like, did these two other companies, AMD and ON, have this kind of performance? Did they have earnings? No, they had they dropped on earnings. Oh my God. They dropped to an excellent retracement level. Hey, that retracement. Oh wait, hold on. I had Ichimoku's confusing me. That's why I take it off. The low of February to the high of September on earnings hit the 50% on the 26th of October, which was the bottom of the market recently. But wow, that was a great buy on Intel. But now you got to take the somewhat inferior Ichimoku breakout. I'm glad I thought of that. All right, let's finish up. VABK looks great in your latest scans. What kind of scans do you do? What looks great about it? My bank my bank buy, which hasn't really mooned but still gives about a 7% dividend yield, is I don't know. I need to see if that's what it is right now. Probably about 6.5, but is Truist Financial Corporation holding and paying me dividends. So if I'm going to do a small bank, I'm going to do that. Let's see, CCL. So I was talking to a friend of mine about that, and what is that symbol they have there? It's a weird symbol they have there. So it's just not that interesting for me. What? It's just not that interesting to me. In fact, now CCL has come to a potential resistance, or is coming to a potential resistance of 1520. I've been talking to a friend of mine who's really into cruise lines, and he's had a winner. CCL, RCL have not done nearly as well. My pick was NCLH. I caught this little run earlier this year, and then I had to close it because I took some profit and then it just wasn't performing. So I closed it out around 1565. Glad I did. But the clear winner among the major cruise lines is RCL. I mean, it's just a lot stronger than CCL. I'm not really interested when we start, like I was saying earlier about AMD and ON and NVIDIA and Intel. I'm not really looking for a discount when I'm trying to buy something, because winners remain winners. And so if I'm actually trying to look at a cruise line, unless you have some specific idea about why one company is going to be better, if you're just looking at the industry, CCL, NCLH, they're all doing very recent price action where they've come down since the summer. They're making a little bit of a comeback. But you really need to be looking at the winner. And the one that has done the best in the last 3 years has been RCL. I don't see a technical setup, but that's just my mindset when I think about stocks and companies. Winners should stay winners. I'm not really looking for something just because it's cheaper, because there's probably a reason. So, all right. Autodesk. I mean, if it looks to you like it's going sideways, I think that, yeah, I mean, you have an opportunity here on Autodesk that if it does kind of break out of this consolidation, then you're probably going to get on the weekly your momentum out too. So you can probably get a breakout on Autodesk too. Consolidations are not a bad thing if you want to play the break of them. And speaking of playing breakouts, let's go through KC stuff. All right, ACLX. That's a breakout. No target there because it's an all-time high. I know that you said something about Palantir, so I'm going to get to that. Yep, another breakout. See, that's the thing. See, Casey's the opposite of that friend I was talking to, where they're wanting to buy puts because things are making an all-time high. Here's the reality of things making an all-time high. Let's just say that you were looking at this instrument and you were like, okay, here is the all-time high at 48.97. I'm going to buy it. And people will be like, but it's at a high. Okay, well, you know what something can do? Once it hits a high, it can do something like do a little pullback, and it can make higher highs. That's why you don't just buy puts or short something because it's going up. Because there's a reason, you may not know it, you may never know it, why something's going up. And it's kind of like, hey, there's this train going really fast. Surely it needs to stop. I'm going to put my hand out in front of it. Oh, I'm dead. Yeah, you don't want to stand in the way of this kind of stuff because, no, just don't bet against something just because it's going higher. Don't try to be smarter. That's the thing. I think a lot of times it's kind of an exercise in ego. Oh, this is Abercrombie and Fitch. Somebody's had me looking at this before in past things. Now that I recognize it, because I've already got it marked off here at this 50% in May. Good for them. I didn't even know that people still wore Abercrombie and Fitch anymore. I mean, I'm not a big fashion person, so I wouldn't know this kind of stuff. Kubi. Let me take off Ichimoku. So breaking from its 50%. Is it? Yes. I like it. That's good. That go up. HTC. Is Palantir making new highs? Is that why I'm going to talk about that? New high? Watch out for these highs around 40, Casey. Palantir. What is Palantir? Is it making a new high? No wonder my friend is so happy. Oh, look at that. Oh my goodness, happiness abounds. Oh, look at that. He's going to break the high. Oh man, is he happy over there? Oh, dude, he must be having a blast. I haven't read chat today, or yesterday very much, but usually when he talks about Palantir, I assume he's going to be really excited about it no matter what. Yeah, of course. I mean, holy crap. Well, I mean, if we go back to and this was was it your recommendation or was it his when we were talking about our defense contractor portfolio? Did I delete that? No. What was it? Was it? I guess I deleted that, but I had there's RTX. What was that other one? Northrop Grumman. I must have deleted that list I had on Lockheed Martin, but I had like 5% Palantir allocation for defense contractors. Well, that 5% will be doing pretty well now. Yeah. KTOS too. Yeah. All right. So yeah, Palantir. I got a friend of mine that would get along very well. All right. That looks like that's all yours, and I've covered everything. I think. Yes. All right. Well, he's doing well. I that's why I can't like come in there and like try to be Uncle Norok too much to him because he maybe he shouldn't listen to me. Maybe he should just live his life. All right. Thanks guys for joining me this week. Next week I will probably be off because I'll be traveling. So don't hold me to it. But the week following I will be back again Friday. Well, December the 1st looks like for sure. Probably not the 24th. But yeah, I hope you guys have a great Thanksgiving or Boxing Day if you are in Canada. Here in America, we celebrate being fat Americans by gluttonizing ourselves more, except with our families. So we're very thankful for that. So be thankful for the gains, whether they're crypto or stocks that you have. I hope that you have a great week, and we'll see you next time. As always, trade wisely. We'll see you next time. Bye-bye.